All right, folks, let's go ahead and go through what the agenda for today will be. What we're going to cover is 2022 tax law changes. Now, we did this same webinar back in the November timeframe, but there are things that change between then and now, and we'll want to make sure that you have the most up-to-date information before the season starts, which will be next week. So we'll go over the tax law changes. We'll also talk about annual updates. Every single year, there are some things in the tax code that change, and we'll make sure we get covered on that as well. We'll also talk about the ramifications of the Inflation Reduction Act, and then we'll finish up with some additional items of note. Now, as Justin said, if you have questions throughout the presentation, please feel free to tap them in the chat box, and Justin will entertain them at the end of the presentation. So let's go ahead and get started. The first thing we're going to talk about is the child tax credit, or Schedule 8812. With regard to that, the first thing to note is the credit reverts to the tax year 2020 rules. And that's important to note because the credit will be $2,000 for each qualifying child, and a $1,500 is eligible to be a refundable credit. Additionally, the credit is available for children under the age of 17 as of the end of the year. The taxpayer must have earned income over $2,500 to be eligible for the refundable portion of the credit, additional child tax credit, in other words. And it's important to also note that all qualifying children must have valid Social Security numbers. Next up, we want to talk about, and this is going to be so important, the Child Independent Care Credit, because there's such a dramatic change with regard to that, which is going to be, of course, reported on the 2441, Schedule 2441. This reverts to the tax year 2020 rules and is now non-refundable. And that's important to note because of what was going on in the last couple of years during the pandemic and how much more it actually meant for people in many instances. The maximum amount of qualifying expenses will be as follows. First of all, $3,000 in expenses for one child with a maximum credit of $1,050 going towards the return, and then $6,000 for two or more children with a maximum credit of $2,100. The maximum credit percentage is 35% for taxpayers with an adjusted gross income of $15,000 or less. And of course, this is a sliding scale, so that 35% will actually go down depending on how much the particular person makes, the taxpayer makes. So we also have the EITC for taxpayers that don't have children, and in these particular instances, these will also revert to the tax year 2020 rules. And the taxpayer must be at least 25 and under the age of 65 at the end of 2022. Further, the taxpayer's AGI cannot be greater than $16,480 or $22,610 for married filing jointly. Okay? So what does this all mean for the taxpayers? And it's so important when they come into your office, especially as they come to you year after year. Please note, all the aforementioned revisions will result in lower refund amounts for many different taxpayers. They're going to come in expecting the same types of returns that they were getting over the last couple of years, and that won't be the case. Additionally, since the federal government did not distribute any economic impact payments or stimulus payments in 2022, the recovery rebate credit will also not apply for tax year 2022 tax returns. So this is very important to make sure that you're educating your taxpayers when they come into your office with regard to these changes. Other changes and reminders of note with regards to the tax laws for this year: taxpayer can no longer treat mortgage insurance premiums as qualified mortgage interest on a Schedule A. Additionally, the taxpayer can no longer take a charitable contribution of $300 unless they itemize. And finally, business meals are 100% deductible for tax year 2022. The next section that we want to cover are the annual updates. And as I said before, these simply change every single year based on how things are with regard to the economies and inflation, those types of things. And we'll start with mileage rates. So for mileage rates for the tax year 2022 per mile, please note for business will be 58.5 cents for January through June and 62.5 cents for the second half of the year. And of course, that had to do with the fluctuating gas prices. With regard to medical or moving, it'll be 18 cents for January through June and 22 cents July through December. And finally, for charitable purposes, it will remain at 14 cents per mile. The next thing that we want to talk about is standard deductions for 2022. And again, this is something that changes with every year. And for tax year 2022, the deductions are as follows. For single married filing separately, it'll be $12,950. If you're filing jointly, it'll be $25,900. and it'll be $19,400 if you're head of household. The next thing that we want to talk about is a change to the virtual currency question that's found on the Form 1040. Now, the verbiage on this question has changed, and it will now read as follows. At any time in 2022, did you A, receive a reward, award, or compensation, or B, sell, exchange, gift, or otherwise dispose of a digital asset or financial interest in a digital asset? This is what the question is going to read for this upcoming year. And with regard to that, the IRS perspective is that all virtual currencies are considered digital assets. And this will include the following: virtual currency, non-fungible tokens, or what we often hear as NFTs, tokenized assets, stable coins, security tokens, and any other assets that are digital and have value, established ownership, and is discoverable. So this expands what the definition is in the eyes of the IRS. In general, this is how we want to go ahead and approach this. The digital asset question should be answered yes if the taxpayer received digital assets, usually a virtual currency, as a payment for goods or services provided, received digital assets as a result of a reward or award, or in general, the digital asset question should be answered no if the taxpayer either is holding a digital asset in an account or wallet, is transferring digital asset from one wallet or account to another wallet or account owned or controlled by the taxpayer. Change to the educator expense deduction for the upcoming year. An educator or teacher can now claim up to $300 for classroom-related expenses without any kind of itemization. For tax year 2021, it was $250. If audited, correlating receipts may be required. We know that if you took that particular credit, you wouldn't be audited. That wouldn't be a term for auditing somebody. In Form 1040, the deduction is entered on Schedule 1, Part 2, line 11. Additionally, if married filing jointly and both are educators, a $600 deduction may be taken and up to $500 from last year. So a $100 bump in that particular case. Next up, we want to talk about ramifications of the Inflation Reduction Act. Of course, they are in place for this year. And the first thing we want to note is the Energy Efficient Home Credit, or Form 5695. Please note that was formerly the Non-Business Energy Credit, and the credit is available for tax years 2022 through 2032. That being said, for tax year 2022, the following old rules and limits will apply, and they are: the credit is 10% of total qualifying costs. The lifetime credit limit is $500 for all years 2022 through 2032, and the credit is available for the taxpayer's main home. Now, starting next year for 2023 through 2032, the following will apply. First of all, the credit rate is 30%. The lifetime cap is replaced with a $1,200 annual maximum, or $2,000 if it includes heat pumps. And the interim credit limits are as follows: $600 for windows, $500 for doors, $600 for other qualified energy properties. And the credit is available for any dwelling owned by the taxpayer. So you'll see the changes between this year and next year, but please remember that we're going to be following the rules for 2022. Next up, with regard to plug-in electric vehicle credits, or Form 8636, the new Clean Vehicle Credit for qualifying electric and fuel cell vehicles does not go into effect until next year, till tax year 2023. So for tax year 2022, the rules that were in effect before the Inflation Reduction Act for qualifying electric vehicles will still apply. And this includes the manufacturing caps on vehicles that are sold. The only change for tax year 2022 is that all qualifying electric vehicles that are purchased after August 16th of 2022 must have had final assembly done in North America. Next up, we want to talk about the Alternative Fuel Vehicle Refueling Property Credit. That's a mouthful. That's found on Form 8911. And basically it says the credit has been extended for 2022 through 2032. And for a residential property, the credit is 30% of the installation cost of any qualified refueling property, such as a recharging station. And the maximum credit will be $1,000. Next, we want to talk about additional items of note. And the first one is changed since we had our last session, which was back in November timeframe. It has to do with the 2022 1099Ks. The first thing of note is more individuals will receive a 1099K this filing season. And the reason for that is the reporting threshold for third-party networks such as Venmo, Cash App, Zelle, etc., has been reduced down to $600. And the IRS announced in December that the reduced reporting threshold will be delayed until 2023, and that tax year 2022 will be simply a transitional year. And this was not in place or had been discussed when we were meeting back in November and discussing these very same things. So there has been a decision made by the IRS, it was done in December, and that this will be a transitional year. Now, when it comes to the 1099Ks, some things of note. The 1099K income that must be reported on the return will include the following: amounts from selling goods and or providing services, income received from renting property, and selling personal items at a gain. The other thing of note, 1099Ks for sale of personal items that were at a loss, or when an individual receives a 1099K in error, should be reported on the Form 1040, Schedule 1, line 8Z and 24Z, per the Form 1040 instructions. So again, you can go to the 1040 instructions and see this if indeed somebody received a 1099K in error or if they made a sale at a loss. Next up, we want to talk about the premium tax credit. For tax years 2022 through 2025, the maximum individual must contribute to insurance are as follows. The maximum amount has been reduced for individuals for all income levels. The maximum contribution percentage ranges from 0 to 8.5%, and the phase out for thresholds above 400% of federal poverty line has been eliminated. Next up, and we've got a lot of questions during this season as we are leading up to the opening of filing season next week, and that has to do with data security plans, or what's oftentimes referred to as WISP. Let's take a look at this. First of all, the requirement is such: the federal law requires that tax preparers create and implement a data security plan. Well, the Written Information Security Plan, or WISP, is what it's come up with, and the Security Summit partners created this sample security plan to help preparers, especially smaller practices, create a plan to help protect their data and information. And this can be found through what's known as the Publication 5708. If you like, you can literally just go to Google and punch in Publication 5708 and it will bring it up. Let's go ahead and take a look at this real quick. I can pop into this, and this is the Creating a Written Information Security Plan found on Plan 5708. What's also interesting about this is there was also an additional publication that was put out, which was 5709. And this is a concise version of this. We can see this as well. So you can type either one of these into your Google, and you can literally come up with this. The important piece is 5709, which is this kind of abbreviated version. If you go to the sample plan itself, it's simply going to take you back to 5708. And 5708 is very thorough in describing the things that are required for you as a tax professional. Look at the following for further information. But again, what I provided for you right there is the easiest way to do this. Just go in and Google 5708, Publication 5708 or 5709, and it will take you to the same places you can get by going to the IRS using the search screen there. Other additional items of note. The opening day of filing season is Monday, and I'm sure most, if not every single person on this call is aware of that. That was just announced last week. At the same time, the filing deadline for individual returns will be Tuesday, the 18th of April, and that's due to the Emancipation Day holiday in Washington, D.C. And the final thing that we want to cover in this call is the IP PIN reminder. That simply states that all taxpayers are eligible to receive an IP PIN if they so choose. When an IP PIN is included on a return, it helps the IRS confirm that the return is truly the taxpayer's. That's the reason that people want to do this, especially if they've ever been in situations where there was some kind of concern with regard to that. For taxpayers with income below $72,000, they can obtain an IP PIN online by using the Get an IP PIN tool that can be found on irs.gov. If you made over $72,000, you need to obtain your IP PIN by completing and mailing the IRS Form 15227. Now, that brings us to the conclusion with regard to all of the things that we wanted to cover in this call. Tax law updates, annual updates with regards to things that have changed with regard to these sites, and ramifications for some of the acts that took place this last year, and finally some additional items of note.